What is stopping you from hitting your wealth building and financial goals? Is it possible that it is long held beliefs or misconceptions around money and your relationship with it? Doug Kinsey, we're going to jump into that today. Thank you for being our guest.
Thanks for having me, Bridget. I'm glad to be here.
So how does this tie in? Because so many people, especially my generation, are missing their wealth building goals and their retirement planning goals. In your experience, what are some of the key elements that keep people from achieving what they want with money?
Yeah, that's a big topic. A lot of people do accomplish what they want to achieve with money. Maybe they don't do it as thoughtfully as we would expect them to. Sometimes there's a lot of luck involved or just chance or in some cases, neglect. Some of the more successful clients I've been a financial planner for 25 years or so, and I have my own business. I started in 2007, right before the Great Financial Crisis.
I was going to ask you about that. Yes.
Yeah. So, it was pretty good timing for us because people realized they needed help back then, and we were able to deliver it. But with the people that I've worked with through the years, a lot of them were not really complex thinkers about money. They just did certain things well. They didn't spend beyond their means. They were good savers. They didn't try to keep up with the Joneses, and they just squirreled away money through their 401ks, or in our area, there's a pretty significant government presence with a big Air Force base. So the thrift savings program that the government provides, which is a very simple 401k plan, basically. So they just set up a portfolio strategy, and just never looked at it, really. I'm sure they looked at it periodically, but they weren't the type of people that, did a lot of active trading or tried to outsmart the markets. And I think, given all the information we have at our fingertips today with, obviously the advent of the internet and now AI, which has some advantages we can talk about as well, as far as confronting some of these behavioral challenges that we all have. But there's just so much information out there. And I think that we're at a level in society, at least American society, where there's a fair amount of affluence and people have the ability to think about, being creative with their money or, finding new and exciting ways to make money. And I think these biases, any behavioral challenges that we all have inherent in our being, are magnified in today's environment. So, there are a number we can talk about, but it affects advisors too, and investment professionals. We have to be careful about how we think about things. I'm the investment officer of my firm, and so, I continually have to challenge myself. Am I falling into this trap? Do I want this to be true? Am I focusing on confirmation bias? Do I want to see this thesis be true, or should I look at it a different way? Where are the challenges to my thesis, and which should win in this scenario? So.
Right. And how
kind
do
of
you
a long-winded answer, I guess, but.
Well, no, but I understand what you mean. And as you said, even the professionals, you have to make sure that you're attempting to remain neutral to see what the outcome is and to interpret the results in a manner where you're not attached to a certain outcome. So, you mentioned confirmation bias. Can you share with everyone what is a way that confirmation bias could show up either as an investor or as an analyst and a specialist?
Yeah, I think it shows up, I'm sure, many times a day for all of us. Every time we make a decision in our minds, we're basically confirming what we want it to be and what we want the answer to be. And some cases, I don't know what percentage, it's probably not the right choice, but we'll backfit the scenario to justify what we're doing. It could be going out and buying a car, and justifying, why they should buy that particular car or that particular house or that stock, or who knows, any number of things. That choice of a life partner, or that person, to continue dating or not continue dating, or we all. We're pretty logical creatures, but we have a tendency to be illogical. And sometimes that's really to our detriment.
Yes. Yeah. But you're right. It shows up. And just for anyone who isn't completely sure what we're talking about, you mentioned part of it is if we say, look at a set of data, but we already know what we want the answer to be, we will read it, observe, and internalize everything in that data that supports the outcome we desire, right?
Yeah.
And that is where we put ourselves in a position where oftentimes things are in front of us in black and white, and we're not able to see it. So how can we challenge ourselves to avoid, as you said, falling into that trap?
Well, I think develop a system to challenge yourself in your thinking. And this is where I think artificial intelligence could be helpful. I've been using it a lot in my practice for a variety of things, and I'm training it to do things for me. But if you train one of the chat engines, the large language models,
right,
like Claude or ChatGPT, they will get to know you as a person, basically. And you can run anything by them, basically, knowing full well that, they're just a machine, not a human being. But you can pose virtually any question or problem to one of those chat engines and get some form of a response that's basically unbiased, unless you prompt it in such a way that it knows what you want it to say, and you have to be careful about that. But I've run any number of things through it. I mean, one example is my wife and I invest in thoroughbred racehorses, and I will, I know enough to be dangerous. I grew up with horses, showed horses when I was a kid, but I don't really, know the thoroughbred industry all that well. But when I'm presented with an opportunity, I'll take the pedigree, I'll take all the information I've got on that particular horse, and I build an AI module for that, and it will run through all the aspects of the offering and the pedigree, etc., and give me all the pros and cons of that particular opportunity. And I have come to rely on it, at least to help me think twice about any of those, because it is a hobby, and it's something that you're more likely to just sink money in than get money out. So really, it's a matter of just trying to evaluate how bad it could get,
right,
and or maybe how good it might get. It's a little easier with investments. I mean, if you're investing in high quality American companies, et cetera, you're less likely to really lose your shirt. But there are times when the market is overvalued, so you have to have a strategy to understand, where are we at any given moment in terms of the economy, in terms of this company, maybe in terms of your entire portfolio. So it's nice to have something that is basically not emotional.
Yes.
Give you maybe the other side of the story before you make a decision. I mean, I've done it with real estate too. It's capable of many things, and it's capable to be trained. I would say that it's not the ultimate solution, because I do think there's a place for emotion in decision making as well. I mean, there's a lot of research on gut feel or gut intuition, and there are even people who think, your gut is really your brain, and it has more input into what your brain says than you give it credit for. And I think guys like Warren Buffett, for example, operate, this may not be complimentary enough, but I think a lot of what he has done in his career is based on his gut feel, his intuition about, can he trust this person? Can he trust his management team? But it comes from his knowledge. It's not like he's flying by the seat of his pants.
Right.
He has a vast array of knowledge in his head.
And analytical skills. And interpretation skills. Yeah.
And he and Charlie Munger, his partner through most of his career, always encouraged people to develop a broad body of knowledge, encompassing different scientific disciplines, math, sciences, finance, economics, history. I mean, in other words, become a polymath, become a Renaissance person.
Right.
That's able to assimilate all sorts of information into a given decision. And I think that's important too. And will AI be able to do that? I don't know, maybe, but I think humans are uniquely skilled. So the challenges we're talking about, these biases, could also be strengths. You just have to know when to keep it in check.
Agreed. Yeah, you need to know. And if you rely too heavily on, say, just intuition, you're going to miss out on opportunity. Yeah, I agree with what you were saying of be a Renaissance person and have a broad set of different perspectives that you look at it from. If you can challenge yourself to say, all right, I'm looking at it through this lens right now. Let me shift over 15 degrees and look at it from this lens. Then I feel there's no guarantee, as you know, in anything we're discussing, or really anything in life. But if you challenge yourself to make the decision from a variety of perspectives, you're increasing the probability that you'll be satisfied with the choice you made, whether it works out or not.
Yeah, and I think on the same rough line of thinking, there was another great investor. I don't know if you remember Peter Lynch, who ran the Fidelity Magellan Fund.
Yeah, that's
another
right.
iconic investor. And I've always kind of liked his advice too, because I operate similarly in our client portfolio models, and I've done pretty well with them through the years, but I don't trade them a lot. I try to buy high quality companies, names that I know, and companies that to me exhibit sustainable quality.
Right.
And that's one of the things he said. Buy things that you know, things that you think are going to do well. I mean, if you go to Starbucks and you like their coffee, maybe look into them and this is not a recommendation. It's an example. It's an example. If you see something you like that looks like it's got sustainable quality, a sustainable moat, maybe that's an indication that you should take a closer look. In my experience, again, not a recommendation, but companies like Costco, to me, it's like, that's easy because now it could be over or undervalued at any given time. So, but they just seem to do things the right way. Mm-hmm. And it's not just about the financial aspects. It's about how do they manage the company.
Right.
There are any number of examples. That's just one.
Right.
So I just think that will make you a better decision maker, whether you're talking about investments, people, friendships, cars, houses, whatever, kids, schools, and I guess have some degree of intuition or knowledge about what things cost or should cost. That's where things get tricky, right? Mm-hmm. Very tricky.
And people end up overpaying for things out of a desire to
at the wrong time.
Right.
Yeah.
Right.
I mean, and AI is another example right now, as great as it is. I mean, there are all these companies with so much promise.
Yeah.
Some will realize that potential, others won't. I heard an interesting observation. I listen to some interesting podcasts. Scott Galloway is one I listen to regularly, and he has some pretty interesting people on his Prof G podcast. A lot of it's economics. Sometimes it isn't. But, they were talking about just the trillions of dollars that any one of these AI companies is going to have to generate in revenue for a long time, and how it's almost physically impossible for our economy to support that. So, I mean, there's not enough money to support them all.
That's right.
At this point.
Yeah, it's going to be interesting to see who emerges as the long-standing companies that'll make it through.
Yeah, it's a little similar to the dot-com era, but I think it's got more sustainability in terms of truly offering substantive change to the economy, good or bad.
Yeah. Well, it's funny. I mean, I'm an example. I invested early on as a part owner of a AI, leaned right in with AI and thought, let's get ahead of this and let's see what would happen, and ended up, not working out. Like you said, so much promise. It had so much promise and it didn't. Do I regret it? Absolutely not. I learned so much from it, and luckily was not significant losses. The way we structured it, there was some loss, but it was not extreme. And had, this in your industry, had the wind blown a different direction, I could be having a different conversation with you right now. So I'm glad that I did it, and I would still do it again, presented with the opportunity. But it is interesting. There are so many with promise, and they're just not all going to make it. And then, like you said, the actual, if you run the math, like you were saying, is it something that would even be possible with the economy? And we might reach a point where something has to give, and what's it going to be?
Yeah, and I think we're at an interesting stage in our history where there's so much, it's a confluence of social media and, being able to see what everybody's doing and the fear of missing out. And I think all that can put even more stress on these biases, which if you don't keep them in check, it could be a fast way to ruin.
Agreed. I'm curious and want to ask a few questions about you. So as you mentioned, and I did the math prior to our conversation, I was like, oh yeah, he launched his own financial advising company right before the Great Recession. So, and made it through, obviously, and it's Artifex Financial. So what led to that? And it seems as if going through the recession while you were building your business sharpened your sword rather than destroying it. you made it through, and you said you learned a lot from that. How did you handle that? How did you lead yourself, and as a CEO and a founder, how did you navigate from that beginning stage, then getting hit with the recession and building to what you have today?
Yeah, and I should probably tell you that we have recently been acquired by another firm by the name of Soltis Investment Advisors out of St. George, Utah.
I think congratulations are in order.
Thank you. Yeah, I mean, we're going to continue working as we are, just with under their umbrella and be part of their organization. And I am not speaking on their behalf today. I'm talking of my own perspective. So these are not their opinions, and really not opinions of Artifex either. They're just my own. So there's that caveat.
Right.
Yeah, but looking back at it, when we first started our business, this was almost 20 years ago. My partner and I were working for a regional bank, and we were at the point where we just were so fed up with working for a big corporation that, in our view, presented a lot of conflicts of interest when it came to giving financial advice to people. And we just thought, we can do this so much better. So we took a chance. We gambled. We liquidated our 401ks. Our wives were working at the time. So, I mean, we were all in. We opened up we've always been fee only, so we don't sell products or anything. It's always been a pure advice type business. We've always done client tax work, tax prep, as well as planning. So we're offering a broad range of financial services to people who maybe our thought was there's a segment of society that doesn't get this. They don't get these services. And it's the middle market. It's the affluent to high net worth crowd. The ultra high net worth crowd have always had access to this kind of thing.
Right.
Either they buy it and make it themselves in-house, or they just have more access. So we just thought, hey, we could do this with technology the way it is. And we became affiliated with TD Ameritrade as our custodian at the time, now Schwab, since Schwab bought TD Ameritrade. So all the parts of the puzzle we could put them together. And I think we were small. We were starting out. We had no clients. And so we didn't have a lot to risk. I mean, other than, it was a big gamble financially for us. But hitting that at the time that the great financial crisis happened in 2008, I mean, we've been through any number of things since then. I think the pandemic was just as bad, if not worse. But I think our core belief was, look, we've got a good model. We've got a good service. We're going to enhance the lives of clients no matter what's going on. And maybe more so when it's difficult, because people realize, they need help. So we've just always stuck to our values, and we just always had faith that if we just keep our nose to the grindstone and keep doing what we're doing, it's going to all work out. And we didn't go into it thinking we're going to become millionaires overnight. It was a matter of just doing something we thought would benefit society in a way that, it's great to earn a living by helping people do better in some way. And our particular strength is finance. So I think it was just, and we like what we do. I mean, there is something to be said for having a passion for what you do. It gets you through the hard times. You don't have to wonder, should I be doing this? You just know you should be doing it. So having that confidence is very helpful. I hear people debate that. Do you need to have a passion for what you do? I mean, I think if you're an entrepreneur, you really kind of do.
I think you do. Yeah. Because
there's a lot of challenges. We've faced a lot of challenges through the years, some that kept us up many nights. And you don't pull through that unless you really like what you're doing.
I agree.
Same can be said for a corporate position too. I mean, really anything you do. Now, in your early years, do you have the flexibility of loving what you do and having a passion? Maybe, maybe not. But in your mind, you can think to yourself, what really would I like to do? And what levers can I pull, while I'm doing this other thing that will help me transition down the road? Like I went and got my CFP certification while I was in the commercial insurance field.
Mm-hmm.
And I liked that well enough, but it just didn't offer as much of a kind of independent advice component. It was really just too sales oriented for me.
Right.
So ultimately, after 11 years of doing that, I just went out and joined Morgan Stanley at the time and got started in the financial advice space after getting my CFP certification. So, I spent a lot of weekends and evenings studying and getting a certification, but I knew what I wanted to do ultimately. So I think if you just keep that faith long enough and work toward it, at some point, the chips may fall in your direction and you can pursue it.
And you can do it.
So, yeah.
Well, it's interesting. You mentioned, and I want to make sure everyone heard this clearly, that with Artifex financial advisors, you all aren't selling anything. I believe you even have like a one-time annual retainer, and then you can get advice from you. I feel like a lot of people, you can correct me if I'm wrong, they don't know that that's really an option. And they hesitate to speak to anyone or have a consultation because they just think they're going to try to sell them something.
Yeah, I mean, the only thing we're selling is our service. I mean, everybody's selling something, but yeah, that's what we're selling. And we don't do one-time retainers, but we do annual retainers.
Yeah, that's what I meant. Yeah, an annual
and they're all
retainer. Yeah.
Right. They're all inclusive, so they include all of our advice. And what we don't do in-house, we help them obtain, we'll oversee. So, and there are advisors out there who will do a one-time retainer. They'll do a one-time review with you. If they're truly fee-only advisors, there are some that operate that way.
Right.
There are some that operate hourly. So, you can manage what you're spending for advice if you need to do that. Our clients tend to be the sort of people that just want to offload a lot of decisions to someone else.
Right.
They want to be a part of it. They want to be part of the decision making. They want to be part of, the strategy, but they just want someone else to bear the brunt of the load, bear the heavy lifting. And so those are the people we generally work with on an ongoing basis. But there are financial planners out there that will do it on an hourly or just a one-time retainer. We used to do one-time retainers, but it just doesn't fit all the different services we offer.
Right.
Our comprehensive nature doesn't really fit that too well. But there are times, somebody's kid will need some advice and we'll help them and help them get set up somewhere where it benefits them.
Are you still working with that co-founder that you started this with?
Yep. Yeah.
It's incredible.
It is kind of incredible because I guess a lot of it, businesses don't make it 20 years.
No.
Having a partnership in business is like getting married.
Yeah. It really is.
We've had our ups and downs, but my business partner and I, we have different strengths and we tend to complement each other. We also tend to operate, we've operated most of our decisions the other person doesn't really have an issue with. On occasion, one of us will say, maybe you shouldn't do that or whatever. But that's beneficial too, knowing who you're in business with.
Yeah.
And in my situation, my thought was it's better to have a partner than to do it solely on your own, particularly when you're giving advice to people, because people don't want to know that, there's only one person in the firm. And if something happens to that person, I got nobody to go to. And so we've built a team up around us over the years too. We've got 3 other people on staff now, a couple of junior people who we hired out of Ohio State University, and another guy who's actually a minority partner in Artifex, younger person as well. So we've always believed in building the team up so it outlives us as well. It's why we didn't name it Kinsey Harp Financial Advisors. We didn't really, we just wanted it to be kind of a generic name
its
that
own
could carry
entity.
forward.
Yeah, so you could grow it. And you're right, passing the baton is much easier when it's an energy and a conceptual name than if it's, your own
Right.
name. Yeah,
But I think the realization we came to too is that at this stage of our business, we'd grown to the point where to grow further, you need more support, you need more of a back office, you need a bigger organization, and that's why we recently merged to carry us forward and you develop even more succession opportunities inside the firm and help facilitate growth.
I think that's awesome. And I hope people are hearing that you're a founder, you took that risk, you gambled at the beginning with your partner and both of your families, I'm assuming were on board, to take that. And having that passion, you've now built it, but you're still so growth oriented that you're truly, even now with the success you've built, you're looking, how do I take it further? So you keep
we still have the belief that we have a lot to offer.
Mm-hmm.
And people can benefit from what we offer, and we still enjoy working with new people and maintaining relationships with our current clients. And I don't know, it's fun to grow.
Right, it is. But what's that
in any
cliche?
Business, you reach a, what's that?
Yeah, what's the cliche? You're either growing or you're dying. There's not a static point that's
exactly.
sustained.
I was just going to say that. And that's true, I think, in any business.
Yeah.
If you don't grow at a certain point, if their current clients pass away or they move out of state or they do something else. And, you have to any business has to keep growing. So it's a decision you've got to make at some point. I mean, the other choice would be you're just going to have a lifestyle business, and that's fine too. But at some point you're going to close the doors.
Right.
So
right.
We just didn't want to close the doors at some point.
So what would you say to someone? I've encountered this, especially in my chosen industry of real estate, and especially post-recession. People can get really strong feelings around money in terms of what they deserve or don't deserve, and also whether or not they would be wasting someone's time. So the question I have for you is, what would you say to someone out there that feels as if they shouldn't reach out to you because they don't have enough in place where you would even want to talk to them? Do you get what I mean? Like they have such feelings of self-doubt and like they wouldn't deserve to have a meeting with someone like you. What would you say to someone that is in that mind space?
Yeah, that's a really good question. I mean, again, because of the comprehensive nature of our services, we do have minimums, but they're not tremendously high minimums. And I think our minimum is about $5,000 a year in fees. So, I mean, that equates to maybe a $500,000 portfolio. We don't, just to give someone an idea, but we don't turn people away. And I think a lot of true financial planners are the same way. They're not going to turn you away. They'll talk to you. And a good planner will tell you whether you're a good fit for them or not. And if you're not, then maybe give you some suggestions on where to go.
Right.
And even maybe help source that for you. And we will do that for people. So it's a good question because the industry is still very fragmented, and there are a lot of different ways to provide financial advice. In my opinion, some more genuine than others. A good place to start is the National Association of Personal Financial Advisors.
Okay.
They're the fee-only trade group in the United States, basically. The CFP Board of Standards, CFP Board, the CFA Society, those are some of the Investments into Wealth Institute, CPAs. Some CPAs provide good, comprehensive financial advice. And I think a lot of people rely on CPAs. I mean, tax is a big issue for people.
Right.
So the advice is attainable, and I don't think people should be self-conscious about asking for financial advice. I'd say you should be one of the best things in the world for you to do for yourself. I wish I had done it many years before I got into this business. I wish it were more available for like my parents and their generation, because it really wasn't.
Right.
I mean, my dad he started out as a life insurance agent, and quite frankly, that's as close as you could get to a financial planner back in the day. That or a stockbroker. You either went to a stockbroker or you went to a life insurance guy, basically. Those are the two interactions people had. And maybe, a realtor, right? And their lawyer for their wills and estate plan. Maybe they had a CPA, maybe.
Probably if they had their own business.
Yeah, right.
That's about it.
So it was always very fragmented, and I think now, it's almost routine where you get all these services in one place. We're a little unique in that we do a lot on the tax world also, but we will help people, for example, find good insurance. With my background in insurance, my partner's background in insurance, we can help people shop insurance. We're not going to sell it to you, but we will help find a good agent, find the best quotes, help you make those decisions, and maybe help you not do things that would jeopardize your financial health in that regard. But having a good, unbiased financial advisor is worth it. I mean, they'd have to have a horrendously high fee schedule to not be worth it. Vanguard does a study every so often, and a lot of people refer to it because they evaluate what the added value of having an advisor is. And, Vanguard is a big proponent of low-cost investing.
That's right.
Low-cost investing. So for them to do a study like this is, they acknowledge, and of course they work with a lot of financial advisors and their clients. I mean, we use their products too.
Right.
But they do a study where they try to value what a financial advisor's worth is, and they typically come up around, it's worth about 3% of your assets, which is more than most advisors charge. Most charge in, the 1% range. So they base that on the biggest alpha generator, the biggest advantage generator in the advisor relationship is what we started off talking about, which is behavioral coaching. It's having that sounding board. I mean, some of the best advice I've ever given clients hasn't been investment portfolio advice. It hasn't been stocks and bonds. It's been, maybe helping them evaluate whether they're getting a good price on a piece of property or, any number of things where I've had to maybe do a spreadsheet for them and help them make a financial decision. And yes, there's behavioral coaching, particularly when the markets get weird and, the noise gets bad on a regular basis.
Right.
But yeah, the behavioral aspect and the stuff that has nothing to do with Wall Street, is really where the value is. Having somebody experienced, credentialed on your side to just call up and say, hey, what do you think? This guy called me and said I should buy this piece of real estate. What do you think, for example? Should I invest in this business? I've had clients ask me, should I start buying rental properties?
Yeah.
And, in our business, at least half of our clients pay us on a flat fee basis. So it's not as if, we don't really have a dog in the hunt as far as where they invest their money. And,
right.
There are a lot of aspects to that question that they need to think through, and they need to know the hard facts.
Yes,
it can be a great investment vehicle, but you have to be mentally prepared and physically prepared to do that. Because when you start out, if you've got one or two or three properties, you're going to have a lot more to deal with than you think. Almost right out of the gate.
It's very noisy. That is the term that we use in our industry. It can be a great gateway to financial freedom. It can be so many things, but it is very noisy, especially in the beginning. It's either noisy or expensive, because if you can't handle the noise, then you're paying management fees, right? Right. So it's great, but you need to know. They need to know the reality.
I love real estate as an investment. Don't get me wrong, but I just think some people get into it without really thinking it through.
Correct.
And that we try to help them think through that. And some people have said, yeah, you're right. I'm not really ready for that yet. But I think it's a fascinating asset class.
Yes.
In a lot of ways, you evaluate a real estate investment just like you would a stock. It's almost a discounted cash flow valuation method. When you value a piece of property, it's almost easier to evaluate. There are less moving parts.
That's right.
Right?
That is true. Yes.
But then you've got some other advantages like depreciation and expenses, and which if you're not careful will bite you later. But while you own the property, there are some things you're not going to get anywhere else. So it's a great tool.
Yeah, and people
you have to know what you're in for.
People that can, not to get sidetracked, but people that can eventually position and create for themselves being full-time in real estate, not as a realtor, but as an investor and an owner. There's huge tax advantages with that too. But
I pursued a master's degree at Harvard a few years ago. I finished in 2020, and part of what I studied was investment real estate. And I was like, wow, this is great, really getting these tools. And I still use some of the spreadsheets we used in those classes. And the guy who taught it is a real estate investor in Colorado. And he was just one of the most motivated people. He loved his profession, loved what he was doing. And he showed us, this is what I'm working on. And it was really cool.
That is really cool. And his passion came through. So tying back to what you had mentioned about that, I wanted to ask you. So you said something interesting is that the pandemic was actually more difficult to navigate than the Great Recession. It's funny when I think about my chosen industry, it's the exact opposite. The recession was devastating for all of us, with a very rarefied little group, the REO agents that thrived. But it was very difficult. And then the pandemic, we sold more real estate than we've ever sold in our careers. It was like wildfire. But it sounds like with your industry, you experienced the reverse. Could you share a little more about that?
Well, I do. I just think we actually did well also. We were fortunate at the time because we have had a pretty close relationship with Goldman Sachs through the years too. And they provided so much good research during the pandemic. This is not a commercial for them. It's just one example of some of the bigger investment banks have a ton of resources. So they were having webinars with, people in the administration at the time and people in the health administration, people with Moderna and Pfizer. And so that was really helpful. And because as the guy managing the money here for clients, it was unprecedented what we were dealing with. So we switched a lot of our focus to the stay-at-home companies, the tech firms. That helped quite a bit. As you may recall, I think it was 2020, when it really hit toward the end of that year, the market really accelerated, mainly
Right.
due to the stay-at-home stocks.
Right.
I mean, the Pelotons of the world and
Yes.
Zoom and, all this. I mean, it actually had a pretty decent second half of the year, but the first half was terrible.
Terrible. Yep.
As I recall, my memory's a little fuzzy, but that's as I recall it. We are doing a lot of things to prevent too much downside. At one point, I think the market was down as much as 50% early on. And then you have people dying. I mean, we actually lost some clients
Right.
back then, which was horrible. I mean,
know.
that didn't happen during the Great Financial Crisis. So, I mean, there was just a lot of things that unprecedented time in history.
Yes.
And of course, you did benefit from it because people were nesting, deciding to buy larger homes to entertain and have their family close to them because they weren't going anywhere.
Yep.
I'm a golfer. I belong to a golf club. Before that happened, golf clubs were actually challenged.
Yes, they were.
Golf wasn't
Yeah.
as popular as it used to be. And, the finances didn't look as great. They were growing, but not great. And then the pandemic hit, and it's like everybody was joining golf clubs because it's one of the few things you could do.
Right.
You could be outside, hanging out with some buddies. You might be in two different golf carts, but you're out on the golf course and out in nature. And it probably saved my mentality, being able to get out and do something.
Right.
So it's just, I just think that was an unusually difficult time, and we as a human race need to give ourselves a little credit for getting through that, and sympathy for those who didn't. That was no fun and just a horrible time. And I remember every day thinking about, what do we need to do in terms of portfolio changes here? How bad is this going to get?
Right.
And, thank God we did have the resources we did at the time to help us make those decisions. But that to me was maybe the most challenging thing. I mean, I lived through 9/11. I was, with a Wall Street firm when that happened. That was tough. There have been some recessions, some downturns in the market, the Great Financial Crisis. Yeah, that was tough, challenging, but that was different in that you could almost see it coming. If you were in the financial business, and I'm sure you saw it in real estate too, just crazy stuff happening. And you heard inklings. Go ahead.
I'll never forget seeing when the first time I heard about someone getting a home equity line of credit for 125% of the value of the property. I mean, I was gobsmacked. That was one of the first times where I was like, what's really going on here? And there were signs.
There usually are some signs. You just have to pay attention to them and know how serious they are. And I don't know, we're all going to get surprised here and there, but I think the Great Financial Crisis or global financial crisis was somewhat, you could see it unfolding. To me, the pandemic was shocking.
Well, it was shocking, and you're right. It was challenging in a different way. And with our industry, even though we had record sales, boy, we had to duck, pivot, innovate, like showing houses virtually, like the stuff that's one thing I'll give my industry is if anyone's going to wake up every day and say, okay, I'll figure it out. that's realtors, especially if they've been in for any length of time. So we did figure it out and pivot, but it was, as you said, tragedies around the corner. It was hard. It was challenging. There was a little bit of, you talked about social media. So on social media, people were like, another day at home in my pajamas, and agents were working more hours than they had been working. And most of us tend to be workaholic anyway. So, you'd see some of those posts and I was like, let me not look at that for a while. It was interesting. I like your take on it that societally we should take a moment and say, good job for making it through that, regardless of what you work in or where you are, or what you do.
Yeah. I mean, don't want to go through that one again.
No, because there was even that underlying fear. Even if you're not a fear-based person, it was a tense time.
Yeah.
And so much division. There was so much division occurring as well.
It was a real case study in human nature.
Yeah.
There really was. And I'm guessing it's probably not unlike any other period like that in history, whether it was the Spanish flu or...
That's right. The plague.
In the 1900s, the plague. I mean, we could go on forever trying to dissect that one, but I don't know that society has even really come to grips with it yet.
I don't believe it has.
The enormity of it and what happened.
Right.
It's almost like we had a death in the family and never mourned it.
Right.
Never mourned
Yeah.
that person.
That's a great way to put it. And then we jumped straight into the AI technological revolution. So it's funny, we went from a pandemic type to something similar to steam engine coming out, or, the industrial age, like just we're still in it. We don't even know, as you said, where's it going and how's it going to turn out?
I guess one of the positive aspects of it is we can have more conversations like we're having right now without having to leave our homes or our offices.
Right.
Although back then that seemed to be I can tell you there were times I thought, I can't believe I spent the entire day talking to a screen.
I know.
But I think the ability to have conversations like this is a definite advancement and a great way to reach people and talk to them. So,
well, it's funny you mentioned that. In the coaching that I do, it's predominantly with high-producing luxury agents all over the country, parts of Canada. Prior to the pandemic, almost all of my consulting was done over the phone. And I'd been doing that since I was a client in 1999. So then this hits and everyone's like, do it on Zoom. And I'll even admit, I was a little hesitant. I think there's when you and I being able to see each other, you can pick up on body language and, silent communication. There's certain things that happen. But I also found that people were not as vulnerable necessarily when you're being watched. So sometimes the phone call consulting, people became more vulnerable more quickly. Overall, I am now Zoom based and I use Riverside for my podcasting. And I agree with you. There are some days where I'm in Zoom for 9 hours and I finish and I'm like, if you had told my 35-year-old self that's what I would be doing, I would have laughed because I'm very people oriented. But it's satisfying now. Now I'm used to it.
Yeah. And that said, I'd rather do this than do it on the phone. I mean,
me too. I'm converted. I am a convert.
I never loved doing business on the phone.
I have a handful of clients that prefer the phone. So they're in my calendar in a salmon-y color. They're the phone calls, but nearly everyone is on Zoom. And I have grown where it's very effective now.
And I think if you're in a consulting business like we both are, I mean, the note-taking tools,
yes,
they're available today. As long as you protect the information. I mean, the note-taking tools are phenomenal.
Right.
I mean, to me, they just enhance productivity so much.
Right.
Not only that, my handwriting's terrible, so it always has been. So I'm glad something else is taking my notes for me.
It's
Plus,
also
it's just easier to pay attention to the other person when you're not writing stuff down.
Agreed. And you can stay up to the current moment in the conversation. So it is. That's fascinating. The other thing in my work is the minute someone says, I'm surprised this listing isn't getting the engagement and the response that I expected, boom, shared screen, everything's up. We're just diving straight in. So it is.
Right.
It's been really remarkable. And
well, that's same in our field.
Right.
I mean, we can pull up the financial plan. We can talk through it together. We can switch over to an investment statement. I mean, real quickly, it's instead of shuffling papers and pushing them across the conference table. I mean, it's way more efficient.
Well, it is going to be interesting to see how this continues to snowball and how it continues to overlap. What more we'll be doing with AI in both of our fields and just life in general. Like you gave a great list of all the things. And I know people. I had a podcast guest where she used, I think it was ChatGPT or Claude. She used it to do a whole analysis of her wardrobe, her colors, the makeup she should use, like everything, all aspect of her person. She gave herself a style makeover using it and she looks great all the time. So it's really funny how, if you lean into it, how much you can use it, and the different applications for it. But this has been, I'm excited for you and I'm excited for your business partner and by extension, each of your families and the people that work with you and for you, that you had this acquisition and you guys are still going strong. And the acquisition is not removing anything that made you who you are. It's actually enhancing what you're able to do and to grow, correct?
Exactly. And, I think for people who have businesses and they want to do a succession strategy through a merger or acquisition of their firm, you can't discount finding the right firm from a philosophical standpoint and a cultural standpoint. I can't tell you how many firms we talked to before we met this one. And the feeling was mutually admirable. So that's probably the trickiest part.
And take your time doing it, right?
Take your time doing it, maybe enlist some outside help. We tried doing it ourselves for a long time, and that just was taking too much time, and we weren't expert at it, so we hired an outside consultant to help us. And I think that's what you should do if you've got a business you're looking to transition.
Well, I want to thank you for being our guest, and thank you for sharing everything about what you've been through as a leader and a founder and a business partner. It's really remarkable. And having that passion that has helped you get through challenges and tough times, which that's all part of the inner estate. It's you leading yourself and connecting to what's so important to you.
Oh, yeah. I fully believe it.
Yeah, I do too. So thank you for being our guest.
Thanks for having me.
I mean, it's interesting because our industries do overlap and they run sort of neck and neck in a way where sometimes when real estate's doing better, maybe traditional investing is, people hop back and forth between the two, and sometimes they're both great. It's interesting to hear your perspective as someone who's been in the trenches as long as you have and has been through so much with it. So I really appreciate that.
Yeah, I think a well-balanced portfolio incorporates a variety of asset classes, and real estate's one of them.
I agree.
It's not one or the other. It's both.
I agree.
Really.
And I've always felt that way. When you talk about the recession, there were people that were overly leveraged, in my opinion, in real estate, where it was all dirt. But that's a different type of exposure that can lead to real problems if things go sideways, as many people unfortunately faced. But I just really appreciate your insight. And again, congratulations. I think that's exciting.
Thank you.
You've got this new stage and you're going to be able to honor your passion and still have growth and create that legacy plan. It's pretty exciting.
Yeah. Well, I want to keep going as long as I can and have no intention to stop now. So I appreciate your compliments, and thanks for having me on the podcast. It's been fun.
If you're listening to this episode of The Inner Estate and you would like to connect with Doug Kinsey, you can reach out at artifexfinancial.com or solsticeadvisors.com. Doug, thank you again for being our guest.
Thank you. I've enjoyed it. Hope to talk to you again soon.